getting into the subledgers. What is subledger? Subledger is basically the other entities where we enter the transaction information. So what are the other modules? Modules like payables, assets, receivables, inventory, subledger accounting, cash management. These are all the other subledgers, as we call them, from where all the data will go into general ledger ultimately. So whether it is receivables, whether it is payables, order management, inventory, all transactions will be entered. What do we mean by transactions? Transactions mean that when we pay a vendor, we do a transaction. When we receive an invoice from the vendor, we do a transaction. When we raise an invoice to our customer, we do a transaction. When we receive a payment from the customer, we do a transaction. Okay. So who is a supplier? Supplier is typically organizations who are selling us a product or who is providing us a service. We meaning the company for which we are going to maintain the books of account, right? For whom we are doing the implementation. Let's say a customer, we are doing an implementation for ABC Company Limited. ABC Company Limited will have vendors. What will vendors do? They will supply maybe laptops. They will provide desk or chairs. These are all products that they are going to sell to the company. Company will buy support service, or some company will buy security services. Company will buy canteen services, facilities and canteen, maintenance, cleaning. All these are service providers. They are called as vendors or suppliers. Okay. So all that information is tracked in payables. And when we raise an invoice with our customer, okay, ABC company, when they raise an invoice with their customer, they will receive a invoice from the vendor. They will raise an invoice on their customer and ask for payment. For example, those who are using broadband at home, or those who have a postpaid connection, Airtel, Jio, or Vodafone, they will raise an invoice to you every month, right? And then they will then ask you for payment within 30 days, 15 days, 20 days, whatever is applicable, right? So that part is tracked in receivables. So anything that you're dealing with your customers will be tracked in receivables. Now let's look at the first of the subledgers, which is called as payables. Payables is part of what we call as procure-to-pay services. What is procure-to-pay services? Procure-to-pay service is like when you are purchasing a service or a product from a vendor, okay, or a supplier. So you have something called as supplier management. That means you have to create a supplier in the system. You have to maintain all information about the supplier, like what is their address, where are they going to send the information, where will you be sending their invoices, when they will be making payments, what are the accounting codes in our system against them, and so on and so forth. Okay. Usually there is a process before raising an invoice, before raising or buying anything from the supplier. When we do a transaction with a supplier, it is always a requirement that we should raise what we call as a purchase order. What is a purchase order? Purchase order is a commitment that the company is making that they will make a payment for the goods or service that is being procured. For example, let's say the company ABC Limited is buying 10 laptops from Lenovo or from Dell or from any other company, HP, Acer, whichever. Now, the cost of 10 laptops may be 5 lakh rupees. As an individual, what do? We go to the shop or we go online, buy it, pay cash on delivery, credit card, and it closes the transaction. But when it is a corporate, like say 5 lakhs, 10 lakhs, 15 lakhs, this amount is not paid immediately. They first, what is the process? They first request quotations from different vendors. Okay, vendor A, B, C, D, they will give the quotation. Okay, you can buy a Lenovo laptop. Somebody will say 50,000, somebody will say 45,000, somebody will say 55,000. They will provide the specifications. Company will then analyze the specifications, analyze with the quotations, and then agree that, okay, this is what we are going to procure. So when they procure, they will raise a purchase order. Okay. This purchase order is then serviced by the vendor. You send a service request or you send the purchase order to the vendor telling them that please go ahead and do this. Please go ahead and send us these materials or these services. Okay. Now, in certain cases, what happens, let's say tomorrow a new person joins in your team. What your manager is going to do, manager will request a laptop for that person, a desktop or a laptop for that person. And that is an internal request, which is called as a requisition. So they will raise a requisition to the internal IT team or the internal infrastructure team, asking them to release a laptop. When they release the laptop, then they will they have it in their store, they will give it to them. If they don't have it, then they will have to go through a quotation, or there might be a catalog also, a list of items which are available. They can raise maybe HP laptop, Lenovo laptop, Dell laptop, and the manager can choose which one they want. That is one way. Another way is, if it is not there in stock, they will say, okay, let us raise a purchase order. So that purchase order will then be sent to the vendor. Okay. Once the vendor receives it, then they will service it. They will send the laptop maybe in 10 days time, 15 days time, 5 days time, 2 days time. So along with that, they will send an invoice also for the payment. Like when Flipkart or Amazon sends you an item, when you buy something, they will send you an invoice, right? That you have such and such, you have purchased such and such item, this is the price and this is what you are getting. Okay. And then the invoice will be paid as per the payment terms. What are payment terms? Payment terms could be the terms under which the payment is to be done. 30 days, 25 days, 15 days, 45 days, whatever the agreed terms are. Sometimes as part of the procurement process, they also want an advance. Maybe 20% is released as an advance, as a commitment that yes, we are going to buy it. And then we are going to pay you, and then the remaining amount is released later on. Okay. So that invoice or payment is entered, the reporting is done on that. How, when is the payment made, how many days, what payment is due, and so on and so forth. Okay. And we analyze the supplier also. How well did the supplier do? Did they service it on time? Did they send the items on time? And all. Okay. Any questions, anyone?
So, Saru,
yes.
From this circle, right? It's not clear from which step we are starting this complete process.
This process actually, it is intermingled here. There is no strict place that this is where we are going to start. Why? Because suppose you already have some stock in place. Okay. Like I said, the example where manager is raising a request to IT team that give a laptop to Alaba. Okay. Now, when that request is raised, that item may be in the store only. So they will directly through the requisition, they will hand it over to, they will release it to the person. Then the rest of the process will not be followed. Got it?
But in general, that what first, like if you take a Flipkart or Amazon example, so we'll search the product.
Correct.
And
So
then
this
we'll
is your catalog.
Yeah, catalog. Yeah.
Yeah. Then you raise the requisition. So as an individual, we don't raise a purchase order. We directly buy it from them. That is like an order that we place with them. Once the order is fulfilled, they will send us the invoice. If it is cash on delivery, they will send the invoice and then we make the payment. If it is credit card, we make the payment right away. This is another depiction of the procure-to-pay process where we receive a demand. Okay, like I said, your manager is requesting a request. Okay, so the manager will raise a request, that is the requisition. If the item already exists, it will be fulfilled. If not, then they will raise a quotation. From they will send a RFQ. Have you heard of the term RFQ?
Yeah.
Yes. So RFQ is like, when different companies, they want to implement Oracle or they want to implement ClickView or they want to implement Tableau or Power BI, whatever. That is when they are raising a request for quotation. They are asking the vendors. So companies like, TCS, Infosys, Wipro, IBM, they will bid. So that is the supplier will send their quotation. The quotations will be analyzed and whatever the client thinks fit, that will be ordered. Then a purchase order is raised by the company. Once they finalize the quotation, purchase order will be raised and the vendor will start supplying. After they supply, the invoices will be, they will send the invoice also, which will be entered in the system and payment will be made. Got it?
Yeah, here quotation will be sent by supplier, right?
Correct.
Quotation.
Correct.
Received will receive.
Yes.
The company as a company
Yes.
will receive. Then purchase order, our company only will be raising.
Purchase order, yes. Whoever is purchasing, they will raise it.
And receipt will receive from the supplier.
Correct.
Even that invoice. Too.
Yes. Yes.
So these are all like will be tracked under supply chain.
Yes, it will be like this part of it is usually done in the purchase module till the point of PO. After till receiving, actually receiving PO, it is done in PO. From the point of invoice, it is done in receivable, in payables module.
So till receipt we purchase module.
Yes.
Purchase module.
Okay. Anybody else? Any other question?
Generally, I read Saurabh, like if a small transaction is, they will everything keep in the general ledger only. If transactions are more, even vendors are more, means then they go for the sub ledger.
Actually,
right?
no. It is actually, if it is anything related to vendors, it is done in payables. If it is anything related to customers, it should be done in receivables, because from receivables, you will get a customer outstanding or customer report. From payables, you will get a vendor report. If you do it in general ledger directly, problem is your accounting may be correct, but it will not reflect in your supplier account, because you are not tagging it in with any supplier. Understood? Once we
But
go
you
into the
cannot
application, you will realize it.
Okay, okay. But the general ledger also, is there a possibility to give the supplier details, account, like details to it?
There you will not, you are not tagging it with a supplier, right? You are only entering it against an account.
Yeah, account.
Account doesn't have the supplier name. So how will you know who is the supplier?
No, we cannot configure one
No.
more column.
You saw general ledger, right?
General ledger. That's what I read somewhere. So they will maintain a small thing means they will maintain in general ledger.
See, usually in general ledger, any direct transactions are discouraged, generally. Okay. But they do those transactions which are like, either adjustments or once in a while, once in a month, some compensatory, or to make some adjustments, they do those entries. Other than that, they don't do anything else. Okay. Now, this is one where they are talking about the RFQs and quotations. In some cases, what happens, the requisitions can flow from other modules automatically. Other modules like inventory or from bill of materials, where these are being consumed. The items are being consumed. Moment it goes below a certain level, then it will immediately come over. Okay, so that requisition pool will have all the requisitions in the system, and then they will automatically, in some cases, it will automatically create the purchase orders. If these are pre-approved requisitions, you know that, okay, every month we are buying, let's say, 100 pen or 100 writing pads, or, something which are consumable, bulbs, or, things like washing, some washing liquids and all those regular consumables, expense items, which you are regularly consuming. Those things you may not think too much about it. High value items you might be worried about. You might need to go for exception approvals or separate approvals and all that, right? Even some items like desktop, laptops, you might have a standardized request like, okay, you enter into an agreement with Lenovo, you say that, okay, Lenovo, you give us 100 laptops every month. We will raise a purchase order every month for 100 laptops. Okay. So those can be automatically created. The purchase orders will be created. They can be sent to the supplier, and the supplier will keep sending them. Okay. You may not go for regular quotations always. There might be a single quotation against which you are scheduling the multiple purchase orders. So this is where the different requisitions can come from other modules, inventory or work in progress, MRPs, material requirements, planning module, order management, or any other system. From there, the requisitions will come, and you may automatically import them, and you will manually create them in the requisition pool and send it over to the PO, generate the POs. So the role of the supplier is to interact with the company and provide information, receive purchase orders, deliver the items. And if there are any returns, if some items are defective or some problems are there, they will be sent back or they will be serviced. And then they will raise the invoices and receive payments for the same. So supplier is a very integral part, very much an integral part of your payables module. Okay, and it is the most important entity over there. Purchase orders also, you can manually create the purchase orders, or you can automatically create them from the requisition pool. So each document is a purchase order. Purchase order is a very, very vital document because it is a commitment that you make to your vendor that you're going to make the payment. So that is binding on the supplier, binding on the company to make the payment. So if you are, when you raise a purchase order, the purchase order has to be accepted by the vendor. If any revisions are made, they will revise it and they will make any changes. Sometimes price changes happen, or some changes, some items are not available. In that case, there might be a change in the specifications of the item that has been procured, or there could be a problem that prices have gone up, gone down, or you make some changes in the document specifications. So when you do a receiving is, let's say some items have been shipped by the supplier. The shipment is received at the gate. Okay. So let's say in your company, you receive laptops. So laptops, they may be transferred to the internal department, IT department, or they might do an inspection to open each and every laptop, switch it on, check whether it is turning on or off, and then send it over or deliver it to the, and then deliver it internally. So there could be 1 or 2 levels of control at the point of receiving. Once it is received, you may send it to inventory. Inventory is like your internal store, or you may send it directly to the shop floor. Let's say a automobile company which is making cars. So moment they receive a wheelbase, or they receive a steering, or they receive an consignment of gears, they might send it to the shop floor for assembling, or they might keep it in store depending on the process or depending on the inventory size. And then the expenses are, if it is an expense item, then they will be sent to the respective employees for using it, or as wherever it is required, it will be used up. Okay. This is about the receiving process. And then when we do an invoicing, we receive an invoice from the supplier. That invoice is entered in our system. You will enter in details like the partner name, the supplier name, or the supplier ID, supplier invoice number, invoice date, what is the invoice amount, and then all the details. If required, you will also match it with, the process is called matching. You will check with the PO. This invoice is received from which PO? Okay. So that PO you are going to then raise against the match with the invoice to check, yes, this invoice is against that PO. That is also a very important process in the invoicing step. You can maintain the invoices, and as and when required, you will be making the payment. Physical invoices, if they are received, they will be kept in the file. When you receive an invoice, the invoice has to be validated in the system. What is system validation or validation in the system? It means you are going to check whether the invoice has been properly entered or not. Whether the invoice, all the things that are required by the system have been entered or not. Only when an invoice is validated will you be able to do accounting of that invoice, will you be able to do payment of that invoice. Okay. When you validate an invoice, you have a choice whether you want to pay it individually or you want to pay it together. Okay. Multiple invoices can be clubbed together and paid in a block, or you might be paying them separately. Okay, one by one, so that you can make manual payments by maybe writing a check, or you can do bank transfer and then do the payments for the vendor. You can create the payment outside Oracle also. Certain, like, you can write a check or you make a payment file from Oracle, and then you send the payment to the bank. saying that, okay, make the payment such and such amount to the respective vendors. So those things can be taken from the application. You can do it through the system. Okay. Anybody, any question? Anybody, any question? Anybody, any question?
Right now, no, Saurabh. I have other questions related to complete thing, like what
Okay.
we are using
Okay.
the project
Okay.
and this one. Need some clarification. Maybe I'll ask her then.
Yeah. Okay. Okay. Now, when we do a supplier, we have talked about the supplier, like, when does the supplier come in? Supplier will when you're raising a requisition, you enter a supplier. When you raise a purchase order, you raise a supplier, you enter a supplier. When you raise an invoice, it is against a supplier. When you're making a payment, you're making a payment to the supplier. Now, when you're making a payment or you're raising an invoice, there are three things here. Okay, we'll talk about it 1 minute. Okay, we'll talk about it when I come to invoices. Okay, now the supplier is an entity which is involved with all of this: requisition, purchase order, quotation, invoices, payments. Next, when you do enter a supplier information, you can have a supplier numbering. Okay, supplier number is a very important thing. Usually companies have a numbering pattern. There is a supplier code, which is the official numbering pattern of the supplier. Then you duplicate the supplier entry, and there are a lot of setup things that you can enter in the system for the supplier. That means when you enter the supplier, you can enter multiple details about the supplier and keep that information in the system. Okay, and maintain all that information in the system so that you can reuse it. You don't have to enter it again and again. So on the suppliers page, you can search for a supplier. You can look at the suppliers, that is the company profile, the supplier profile in terms of the organization, name, tax details, addresses, contacts, what is their business classification, what product and services they're supplying, their banking details, and so on. You can also do an update. You can do a list. Okay. And it will continue. You can enter the accounting information, tax and reporting. All right. Purchasing information, receiving information, payment details. Okay. All this information you are entering against the supplier. On the search supplier page, you can search by the supplier name, supplier number, and all those. And then you can go for an update, or you can also create. Search is only when there is an existing supplier information. Okay. So this is an example. When you are entering a supplier, you enter a supplier type. You enter the name. You enter the number. You have a taxpayer ID. Or you have a tax registration number. And if you no longer will be dealing with a supplier, you can put an inactive date. So after that date, it will remain inactive. You can also link it with a parent company. For example, a company has been taken over. Then you can link the child with the parent. Okay. When you enter a supplier information, a supplier can have offices in multiple places. Like in this case, Tokyo, Paris, New York. And each address that you are having, it is designated as a site. It is called as a site, supplier site. When we talk about supplier site, each supplier site will have a particular purpose. What is the purpose of the supplier site? Is it for requisition, requesting a quotation? Is it a place where they are purchasing related information is sent there? Or is it a site for payment? That means you are receiving payments from you are sending the payments to that particular site, right? Earlier we used to send checks, right? Nowadays, of course, we don't send checks. We make the payments online, or we deposit the check directly in their account. That is why we have to keep talking about, these sites. What is the purpose of that site? Okay, each site is usually linked with an operating unit. We talked about operating unit. So invoices and supplier sites are linked with payments are all linked with operating units at the transaction level. These are the business classifications. In the US, there are some specific classifications, minority owned or women owned or a small business. These classifications are as given by the US federal government, and those have to be tracked in the application. These are the different product and services that are serviced by them. These are the banking information, name of the bank, bank number, primary or secondary currency, and so on and so forth. All this is information entered for the supplier. Then you also enter the accounting information. That is, the accounting information is held behind the scene, and all new supplier sites, and those will default to all new supplier sites for the vendor. Okay. Supplier side, accounting values, which account, some default accounting values are all set at the site level. So when the invoice is being entered, this information will default. For the purchasing options, you have to enter all the purchasing information by default. Like, what is the ship to location? That means where are they going to send the items? What is the bill to location? How are they going to ship it? Via which transport or which means of transport? Then it is pay on receipt. Okay, whether the payment is due on receipt or not, like cash on delivery. Alternate pay site, invoice summary level. You can create a debit memo from RTS transaction. You have gapless invoice numbering. That means invoice numbering will be one after another. Free on board. That means they are responsible for putting it on the ship. Freight terms. What are the terms of who is responsible for paying the freight? Transportation, who is going to arrange? What is the country of origin? Okay, all this information can be maintained on the supplier information. This is related to receiving. So when items are received from the supplier, are there any restrictions in terms of, what is the approval required? If there are any variations, so they were supposed to send 10 items. If they send you 2 items, is that acceptable? Or if they send you less number of items, is that acceptable? So those kind of things are also maintained or uh, put in the system, entered in the system and tracked. So if you enter these and you say that, okay, quantity received tolerance more than 10%, you will not accept. That means you ordered 10 items, the company sends you 6 items. It is below 10% deviation. System will not allow you to accept it. Okay, these kind of rules you can have in the system. Substitute receipts. That means this, you had asked for a laptop, let's say i5 laptop. They have sent you an i3 or an i7. Is that acceptable? Yes or no? So depending on how you allow, how you set up these configurations, the application will be working accordingly. Then these are the payment methods. How does the supplier want to be paid? Through checks, electronic, outsourced check, wired check, or whatever. Invoice management. So what are the invoice details? Okay. Whether you want to hold it from payment, you don't want to pay the vendor right now due to some okay, pay group, taking discount, you want to consider discount, whether you want freight, when you are including freight, do you give discount on freight? Create interest invoice. At what time do you want to create the interest invoice? So these are things that you can maintain in the application. For example, at the site level, you can have different payment terms, different pay date basis. Paris, New York. So these, depending on the site, you can have different payment terms, different pay date basis, different ship to locations. Maintaining supplier and supplier site information, you can change values default only to new documents that you subsequently create. That means any changes that you're making, they will not affect your existing documents. They will only affect future documents. Okay, so they only apply to future documents. They will not affect current documents. Remember that. Holds. Hold means if there are any if you want to hold back payment of the supplier due to any reason, whatever, then you can do that, or you can only hold back unvalidated invoices for the supplier. Okay. You can enter all the tax details of the vendor as well. Taxpayer ID, registration numbers. There is a module called as iSupplier. Through that, you can also request supplier, supplier can make requests, supplier can access that application and enter all their information. Okay, and when you are entering suppliers, okay, you can check whether the supplier already exists. Okay, now system will require that you enter unique names. So it will only check on the name, but even a space or a dot or a letter is considered is sufficient. Something which is different, you put an extra dot, you put an extra space, that is as good as a different supplier name. So please be very careful when entering supplier names. Okay, for example, if you see here INC dot XYZ INC dot and XYZ INC, these are two different suppliers. Why? Because the dot is there. If the dot is there, it means that the dot will not be will be considered and it will turn it into a separate supplier. Okay. Example 2, the Sun INC, Sunco are obviously different suppliers. So one has to be very, very careful when entering all this information in the application. Now, in spite of all the precautions, there might happen that duplicate supplier information is raised. So in such a case, you have to run a supplier, you can run a supplier audit report. You can identify possible duplicate suppliers, and then you can choose to merge. So when you merge suppliers, then what happens is information like invoices, supplier sites, those get merged as well. And you can choose how you want to merge that information based on your preferences. For example, here is an example. See, this Oracle Corp and Oracle Corporation, these are two different vendors, suppliers. Now you don't want Oracle Corp, you want Oracle Corporation. So when you're merging the site names, CA Redwood is there in both of them. Here it is IL Chicago Reston, whereas here there is an additional Orlando. This Orlando will be copied over to this Oracle Corporation vendor. Got it? Okay, everyone. So these, when you're merging suppliers, new additional information is merged. So you can get a supplier merge report, you will get a purchase order header updates report, because a lot of your sub or purchase orders may exist. So those will also need to be modified accordingly. Okay. So when you are implementing payables or supplier entry, you have to have, separate people, separate responsibility who is engaged in creating supplier information. You have number of staff who are required. You can consider good internal control and segregation of duties. Okay. This is one very important aspect that we must consider. Okay. And all companies do this by segregating the duties. So you saw those responsibilities. In real life, you will find that there is a separate person who does the supplier entry. There is a separate person who does the invoice entry. Okay. Clear? Then you have supply and naming conventions. This we have discussed. So these are additional examples that they are talking about. Spelling decided for easily misspelled suppliers, exact spelling, use of case, uppercase, lowercase, Mr., Miss, M/S, any approved abbreviations, site name structures, address format. All these are important to maintain the supplier information. Supplier numbering can be in two ways. One is automatic, one is manual. Automatic, it will be a serial number that the system will automatically generate each time you save the invoice. You can switch from manual to automatic. Okay. In that case, there is a setting, one place where you can go and update the highest supplier number. And from that number onwards, new supplier numbers will keep getting generated. Okay. Now, when you create suppliers, one way is you can create them directly in the application. Another way is you can import the information into payables from another system or from an Excel sheet or from files through what we call as the supplier open interface. Supplier open interface is the way in which you can import the supplier information into the respective tables. So in some cases, they get it from the system also. Okay. And then accordingly, you will be able to generate it. Nowadays, no one uses fax, but you can have email and all that, where you can send out emails to the supplier or the vendor and so on. Okay. So this is about suppliers. Anybody got any question on suppliers? Anyone? Any question on suppliers?
Like merging only somewhat confusing. So
which one? Merging.
Merging one. So we know like which is the correct. So if something is is not correct when you merge, all the details which are there in another one also will come into the main one.
Correct. Yeah. That is the concept actually. So you have something incorrect. You can't, a lot of systems, they don't allow you to make changes to the supplier. After you have created, if you have invoices or if you have payments against suppliers, then you cannot make changes to the supplier information. That is like a, you can say a control feature. Okay. So unless you provide a way of merging the supplier, okay, which is an official way of making changes actually. Okay. Now, since there are no questions, let's go into invoices. We talked about this procure-to-pay life cycle. So in this is where we are right now. We are talking about invoice and payments. So let's understand invoices. When we create a supplier, okay, this is the flow of the payables process. Invoice is over here. So we enter an invoice either manually or we can import from the application as well. Through another application, there is an invoice interface that you can import the invoice. and then you need to validate that invoice. Unless that invoice is validated, you cannot make payments, you cannot create accounting entries. Okay, so every invoice has to be validated before you can proceed with processing of the invoice. There are different types of invoices that you can enter. The normal one is called as a standard invoice. That means you have bought a service or a product from the vendor, then you want to sell, or when you want to pay it, so you will need to pay it, right? So for that, you have to enter that invoice in your application, and that is called as a standard invoice. You enter the standard invoice in the system, and then you can generate it. Okay, then you can process it. So that is a normal standard invoice which you are entering. You have bought a product or services and you want to pay for it. So that is a normal standard invoice. Okay, you have what we call as a credit memo. Credit memo means you want to give some credit to your vendor. Okay, maybe vendor due to some reason, maybe check bounced, or some late fees, or late fines, or you returned some items to the supplier. In those cases, you can raise a credit on your to your vendor or supplier. Then you also have a debit memo. A debit memo is the that is also like an invoice, standard invoice, but it is not related to the product or service directly. Okay, that is something additional that you raise. And mixed, usually it can be either positive or negative, but we don't always use mixed too frequently. Prepayment is like an advance. Okay, it is an advance that you are paying to your supplier for a particular purchase order, and as and when the final payment will be made, it needs to be adjusted. So you raise a standard invoice. Let's say you first raise a prepayment for 20,000, and the final invoice is for 50,000. When you're making the final payment, that invoice will be entered for 50,000. Standard prepayment will be there for 20,000. So you will adjust that invoice first. So 50,000 minus 20,000, it will become 30,000. So that 30,000 you will then adjust against your vendor payment. Okay, so that is a prepayment. Expense report is an expense reimbursement that you pay to your employees. So employee goes on a foreign trip, or employee goes on a business trip, and then he comes back and submits the reimbursement request. Okay, that is an expense report. Withholding tax is the tax deduction type of invoice. Is a different type of tax deduction. There are different rules in different countries that when you make payment to suppliers, you're supposed to deduct percentage from there. Interest. What if these are interest amounts that you are paying to your for your any product or service, late payment or whatever, those are your invoices. Interest. Retainage release. There is a system in the industry where in certain industries like construction in particular, when a road construction is done, okay, when a road construction is done, as a guarantee, a certain amount is held back from the payment. Okay, this is as per the terms of the purchase order only. they will have these terms originally that, okay, out of the total invoice amount or the total budget, total work order, 10%, 5% will be held back as retainage. Okay, you will retain that, which will only be released after the job is completed in the future. Then you have transportation invoices. Transportation invoices are done separately to ensure that the transport cost is accommodated properly. Okay. So when you enter the invoices, there are two places in which you can enter the invoices. One is through the workbench, one is through the quick invoices window. You can also generate invoices automatically by creating recurring invoices. We saw recurring journals. So here you can have a recurring invoice. Every month, these invoices will get automatically generated. You can also have RTS, that means return to supplier invoices. And you can also have retroactive price adjustment, any price changes due to foreign exchange variations or foreign exchange fluctuations. You can raise any price adjustment invoices. So when you are entering these invoices, you can enter them individually or you can enter them as a batch. So you can, when you are entering the batches, you can collect your invoices and then enter them in the application in groups so that the batch, invoice batch can be tallied, checked, and then updated in the system. Then you enter a batch of invoices. You can check whether, you were supposed to enter 10 invoices, how many you have entered, how much of value of the invoices you have entered, and so on against that particular batch. So from the batch, you can then generate your invoices individually. So these individual invoices also get generated. Okay. Now every invoice has a particular structure. What is that structure? There is a header, there is a line, and there is distribution, and there is scheduled payment. So what does it mean? Suppose there is an invoice that you are entering. So the supplier name, supplier number, what type of invoice, what is the currency, what is the payment terms, you will enter at the header level. An invoice can have multiple lines. What line? Suppose you go to a shop and you buy a laptop or you buy a desktop, you buy a keyboard, you buy a mouse, you buy a printer, you buy a scanner, okay, you buy a web camera. So these are all individual lines within that invoice. Got it? So one invoice can have multiple lines. Now, based on the invoice lines, you can have distribution is nothing but the accounting information, which how much amount you are charging to individual accounts. For example, you have rent. Okay, rent you are paying to your landlord and you are charging it to the different departments who are part of your distribution, who are part of your organization, HR department, or those are different heads to which you will be charging it. HR department, marketing department, finance department, and so on. Okay. Now from the invoice workbench, you have different windows for doing different things. Like header, right at the top, you have a header. Then you have a line screen, you have a hold screen, you have a payment screen, schedule payment. These are all different prepayment applications that you have in the system. And then there are additional features. These are all additional buttons that you enter in the system. You have things like actions, how you can calculate the taxes. There is a calculate tax button where you can check the tax details. You can do a quick match. So there is a separate screen where you can go and match your invoice with your PO, purchase order. Then you have a distribution screen where you enter the accounting information for the individual invoices. Okay, all this information you are entering at the invoice header level. Invoice type, trading partner, supplier number, supplier site, invoice date, invoice number, amount, description, payment terms. All this is at the invoice header level. So what do you enter at the lines level? These are the things that you enter. What is the amount? What type of invoice is it? Is it an item? Is it a freight? Is it a tax? Or is it a miscellaneous type of line item? Item ones are the direct product or service that you are procuring. Freight is the transport cost. Tax is what you are paying as a tax. GST, VAT, and all those are taxes. And miscellaneous can be other types, like, maybe a rent, maybe a interest, or maybe some additional amounts that you are paying. Those can be miscellaneous type of payments. And amount is how much you are paying. On top of it, you also have things like, if it is related to projects, you can enter project information. If it is related to asset, you can enter asset information at the lines level. When you enter the distributions, you can enter how much you are paying against individual invoices, to which account you are charging. Okay, so you can enter distributions like manual, or you can enter them manually, individually. For each invoice, you can enter the account like we were entering for the journals, or you can create a distribution set. Distribution set, what it does is, like I was telling you, rent or internet, you are proportioning it to different departments. So that is the distribution set. Allocation, this is what you are allocating based on a particular percentage. 10% maybe every department, or 25% every department. Invoice validation, how much of invoice, when you are validating the invoice will check that whether the distribution total is matching up with the invoice total, line total is matching up with the invoice header total. If there are any mismatches, then the system will put it on hold, and you have to go and rectify, and then only you will be able to enter it in the system and proceed further. Distribution set is like your allocation set. If you remember, we had this recurring journal and the mass allocation in the journal general ledger side. Over there, we were entering the distribution sets. Okay, where you had distribution set is basically combination of the accounts into which it is going to get charged. So when you are entering the distribution, you have to specify what type of item and what is the amount and the account code into which that particular charge account, where that amount will be going. Freight distribution, this is for the transport cost. You can charge it to a separate freight account. Tax distribution, when you click, there is a calculate tax button, or when you invalidate the invoice, the taxes are automatically calculated and the tax distributions are created. Scheduled payments, based on your payment terms. When will the invoice be paid, or how much of that amount will be paid is what you enter in the system usually maintains this. And if there are any restrictions or any reasons for holding back payment, then you can hold the scheduled payments. Otherwise, the payments will be done as per the schedule or the payment terms with which you have agreed with the supplier. This is matching of the purchase order and the receipt matched invoices. You can match invoices to purchase order. You can match invoices to the shipment. You can match invoices to the distribution. And you can also match invoices against the receipts. Okay. So this is called as two-way, three-way, or four-way matching. So what does it mean? When you check the quantity billed and quantity ordered, that by default is one way. When you check the unit price in the invoice and you check the PO price in the invoice, that is a two-way matching. That means you are matching it, you are checking two things. Three-way matching means you are also checking whether the quantity billed is equal to the quantity received or not. And four-way is the quantity billed, whether you have it quantity accepted or not. Okay, so this is called as the matching levels. Okay, two-way matching, three-way matching, four-way matching. So these terms mean, what does two-way mean? You are matching the quantity billed with the quantity ordered. Quantity ordered where you will get in the PO. So you are matching the invoice document with the PO document. Two-way, unit price you are matching with PO line price. Three-way, quantity billed you are matching with quantity received. Four-way, quantity billed you are matching with quantity accepted. Okay. You also have a provision to enter quick invoices. What does quick invoices mean? As you saw, the invoices have a lot of details in them, right? Through quick invoices, you avoid entering so much of details. You just enter minimum information and you're done. And you will be able to create the invoice, validate the invoice. Maybe later on the data entry person or somebody else can go in and enter additional information if required, or you don't need to enter. In that case, only the minimum invoice details is entered and the details are created. So what is the quick invoice process? In the quick invoice window, you enter the invoices, the data stored in open interface tables, then you import the invoice records. Okay. And the payable creates invoices with distribution and the scheduled payments. So once you run that import program, all these invoices will flow into the actual invoice tables. Invoice batches, here also you can group the invoices in different batches. Validation of invoices, you can validate the invoice and only then will you be able to create accounting or pay invoice. Till then it will not be enabled. So you cannot enter any invoice or ledgers or any accounting information till the invoice is validated. If the invoice fails validation, then there are different levels of validation and holds that the system will put. Hold means it is like a restriction. You cannot do further processing. So you can do invoice level validation, you can do batch level validation, you can do system level validation. What is the system level validation? Like Invoice header is equal to invoice lines. Invoice line is equal to invoice the accounting distribution amount. These are all different validations that the system must fulfill. Otherwise, those payments, the invoices cannot be processed. Approvals, you can also send it for approval through the workflow engine, which is there inside Oracle. So once you enter an invoice, if that invoice requires approval, it will go to the manager or the finance manager, or depending on the rule that is created in the application, all this information will flow and you can see that information in the system. The manager or the users will see it and they can approve or reject as per their requirement.